The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to a very special edition of the Power Trading Hour. It's special because we're down and not up on the NASDAQ and the S&P cash. We're off 1.3% on the NASDAQ at 1944, off 26 points with almost 2.6 billion shares on the New York Stock Exchange consolidated tape. We went pretty much exactly to where we were talking about over the last couple of days. Yesterday I said the odds of hitting 1938 had probably gone up about another 10% before we even had an opportunity to go after 2,000 on the S&P cash. And I put those up to 80 or 85%. Well, it went right down there and tagged it. 1937.46 for the low so far today. We haven't had a meaningful bounce other than going to the support area and then bouncing up here, maybe as much as 7 points. There has been no energy on those upsides. We are also going into Thursday. Thursday, of course, leads to Friday, and the question is whether or not a lot of people want to get in front of this freight train going into a weekend, and generally the answer is no. I suspect we're going to have a few people dipping in. There's going to be a little bit of fun buying, and there's going to be some outflows. I suspect we probably had some outflows, and pretty rare to have a big move right in the center part of what is normally window dressing or fun buying at the end of the month. For people new that don't know about it, most of these funds have to be fully invested 100% every month. If they have money come out, of course, they've got to sell stock. If they've got money come in, they've got to buy some stock. So it is at the mercy of people investing. But instead of buying throughout the entire month, they cram it all into the end of the month and the first few days of the next month. Actually, I think it's the last 2 days, or last 3 days of the month, first 2 days of the month, they're supposed to be 100% invested. And most people don't understand the difference between fund managers and money managers. Money managers buy funds, and then they hedge those funds. So they expect a tech fund in the semiconductor space to be 100% long, not sort of long, and then they'll construct their own hedges against that. And of course, the fund manager that's buying these is trying to find the best mix to give the highest return. And of course, the money manager is buying that fund, trying to figure out how to get the best return with the lowest possible volatility and downside. And it's always kind of a circle of trying to get probably what a lot of times is impossible, which is the ultimate risk-reward scenario. But they try. And of course, they're forced into buying these at the end of the month. So when you don't see a strong market, especially starting on, we can give a pass on yesterday's Fed news that maybe they weren't right. That we don't see people coming in and buying hand over foot today tells you one thing. That is that they found the flows are on the outbound side, not on the inbound side of this month, and they are selling to raise cash to pay those folks back that have dumped some shares. But I digress. And, of course, we're probably going to win just a few more awards to hang on the shelf next to that Emmy. That's always nice to polish it. Oh, excuse me. That used to be my old line, probably 15 years ago. If I came up to a table of women, I'd go, excuse me, I've dropped my Congressional Medal of Honor. Did it roll under this table? But you'd be surprised how well that broke the ice. But at home, it's a little bit better to go on the mantle and go, excuse me, I've got to dust off Miami one more time. Am I too big a jerk? Probably. Anyway, when we look at the markets out here, huge volume and everything that we're looking for in a market that says it's time to adios down the road. We went straight to the support area. We haven't had a meaningful bounce yet. Could we have some funds come in and buy at the end of the day? I think the answer is yes. They probably won't buy into Friday. They'll probably wait and come back Monday. That would still be why they say that they have to buy. They don't have to actually be, they could buy on Monday, let me put it that way, and no one's going to throw them in jail or yell or scream at them. So normally, if we're looking for a bounce, even in a down move in the market, it is not uncommon to watch these funds wait until the market's bottom and then go back and start buying. They already know at least the inflows and outflows of their particular fund, and their fund's probably not going to be very different than any other sector fund. If they're in semiconductors, they already know what they should expect. If they're getting redemptions, they know that the other funds in the semiconductor space are probably getting redemptions. And so they'll redeem what they want and know that they need to get selling early on. If you're in another sector that's actually getting cash in and the whole market's headed down, the best way to make your case a little bit better is wait until everybody's blowing to the downside and start dipping your toe in the water. You don't want to buy too fast either and put the price up or put a bottom in yours. You want it to sink down where you can get the best possible price. And then the next day or two, everything will go back to normal. And, of course, you'll be cashing those giant reward checks at the end of the year from Goldman Sachs or J.P. Morgan or whoever else pays you. But we've got to be watching this fairly closely, and my guess is that we sell right into Friday's close. And we'll probably have some kind of pop on Monday, and that will be those funds probably in the sectors not hit very hard, where cash will probably move around to as they go into the round robin of trying to play whack-a-mole on which sector is not going to hit. My guess is going to be the safest stocks that you can find. And for the most part, they're going to try to go after blue chips. My guess is those get sold anyway, though, and it will not matter. And, of course, I'm fairly happy today because I had a lot of 3X funds out here that I've been waiting around for the major turn in here in the market. As we normally start off the show with a little bit of histoire, deep in the middle of the Second World War, Robert C. Merton is born in New York City. He's the son of a Columbia sociological professor. Anyway, along with Fisher and Fisher Black and Myron Scholes, they came up with a thing called the Black-Scholes model of options pricing. For those people that are new to investing, the option people were pretty much pushed out on the curb, which was a real thing, actually trading outside the limited space of the New York Stock Exchange for years, and kind of pushed off onto the edges of the marketplace because there was no mathematical way to actually figure out what an option price should sell for. They were always wildly off and wasn't a good way to make money. It's kind of like not having actuarial tables as a insurance company. You've got to kind of have some kind of idea of, if you're selling life insurance, what you should charge for a guy that's 50 and what you should charge for a guy that's 25. The good news is that the mathematical model helps millions of Americans grow wealthy. The bad news is Merton runs and Scholes become huge partners of long-term capital management and nearly blow up the world economy in 1998. I've brought up this whole long-term capital management thing many times as a good example of not having a healthy respect for the market. And for those people that don't believe that governments can be, or that do believe governments can be bigger than the market. But a lot of great books about long-term capital management and the history of Merton and Scholes. And Paving Wall Street, I love that one. There's a few more. If you just search for Paving Wall Street, you'll see the same books listed under Amazon. You can go pick them up. They're cheap and well worth the cash, and figuring out how people who are absolutely smacking brilliant can be so stupid. Because these guys were absolutely brilliant. And that's it. Again, I've been talking about this for the last few days, and that is, markets don't come in one grand blaze of glory. Neither do they reverse in a matter of form. That's a quote from my, as I try to channel him, Jesse Livermore, one of the greatest traders ever. And, of course, all truth passes through three stages. First, it's ridiculed. Second, it is violently opposed. And third, it's accepted as being self-evident. And thank God that we're still seeing people. In fact, I checked in with the financial infotainment shows, and they're all still as bullish as you can stand, which is great for me. I don't want them to become too quickly too pessimistic. They did last time, and, of course, the market rallied. As soon as they all said that the market was going down another 50 points the next day, the market popped. Right now, still nobody's saying it's going lower, which is exactly what I want in this market. I want all those talking heads to keep telling everybody the market's going up. Anyway, Arthur Schopenhauer, about that, with that quote about the three phases of truth. And, of course, eventually the truth will be the market's going lower. And at that point, we'll probably be at the B point of an ABC down in this market. At least that's what I'm speculating. And, of course, the other good quote for today is from Buffett. After all, you only find out who's swimming naked when the tide goes out. And suddenly all the warts come out on these stocks when the market starts pulling back. Of course, we had calls and people asking about, I think they wanted to buy VoxelJet, VJet. A few days ago, I said there's absolutely no way the risk-reward sets up for buying a VoxelJet with 3D coming out with earnings on Thursday. And, of course, it tanked huge. It looks to me like an ABC down. And we've been talking about that for 10 days. And we'll get to that chart later in the day. Of course, earnings 16 cents a share, 2 cents below consensus. Revenues rose 25%, but nowhere close to where it needed to be. And like I said, a lot more people in this business, even HP's getting into it. Look for some kind of consolidation. I'd love to see DDD back in the $30 range. And maybe after 6 months of consolidating out down there and getting rid of the weak hands, maybe it will be time to buy. Warren was out telling people to buy today? Ooh, I didn't see that. I'll have to check on that during the break. Be back in a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we'll probably talk more about 3D printers and all that on the Tech Insider Hour tomorrow in the 4 o'clock hour of the Tom O'Brien Show. And, of course, Andy Heck IM'd me here during the break. He must be listening. And he worked for the long-term capital management guys at Solomon. And there were words exchanged. And they were not nice words. They were, as my mom said, bad words. I didn't know words could be bad. I think the intentions behind them could be. She didn't agree with me. She thought words were bad. So anyway, but he had comments, and I will let him talk. Well, one day we're going to have to get on the air and talk about it, especially since he worked with those insane guys. But there's always the belief that you're smarter than the market, and there are so many people that have been humbled by it, including me. So I'm probably one of the most humble, if I don't act like it all the time. I am inside. Got a few huge amount of sectors out here that are showing incredibly huge weakness. Ryland, of course, more bad news. It was off almost 7%. Standard Pacific off 2.5%. Pulte Group off just under 2.5%. Lumber Liquidators off 2%. MDC Holdings off 2%. Mohawk. Just the whole housing sector. This is at 130. I didn't have time to update all these boards, but I thought when we're looking at these sectors out here, you need to be watching them. 3D's sector, of course, being hammered. 3D System was off almost 10%. Stratasys off 4%, back under $100. Voxeljet 7%. X1, and that's 8.5%. Of course, that caller where I said, you need to be waiting for here. But it looks to me, we're going to get into the charts here in a little bit on 3D systems, but I think we've got a pretty much confirmed ABC down on that thing, which would send it to about $30. Solar, another sector that I've thought is huge and bloated, and we'll be writing about in the Tech Insider. There's a great article in The Economist that basically had my thinking distilled. They went a little bit farther into it, the next level down, not the seventh level, a circle of hell, but why I pretty much think solar is probably vastly overpriced at the moment. Although there's always good news just around the corner in this sector. But China's energy, of course, we put on some restrictions on solar cells coming from China. Jinko down 4%. Canadian solar, of course, not affected by that, off 4%. SunPower off 3.7%. Reni Solar 3.5%. First Solar off 3%. And JA Solar off 3%. Of course, as far as I'm concerned, these things way overpriced for what they deserve. And I'll be talking about that in the Tech Insider tomorrow. Anyway, it is a mad, it's very mad market. Now, I bet people are getting madder as the day goes through when they don't see the usual pop out here. Maybe I should knock on wood before I say that, but still off 27 points, 2.7 billion shares. My guess is it's going to be all about the last 30 minutes of this market. But I don't think that the fundies that do need to purchase are going to be purchasing anything before Monday. They're going to let the dust settle on this one before they ride in and wait for the whites of their eyes. Anyway, wanted to get into a lot of stuff that's moving. First, I wanted to look at that DDD chart and show what I'm thinking about is the long term on this one, which is a big ABC forming here, and probably have some expansions. We have 82. That 82, let me get back out of here. This 82.65, I think, is my A in the B point. I'm looking at the 43.35, and of course, that huge spike, which I was trying to get my readers into, but of course, it was in the blink of an eye and long gone. You had a 66% retrace up to that 69.56 July 1st pop out here, where they just stuck it to everybody that was short this. And of course, I'd be short this long term, but we were looking at 35% short interest in this. I guess we didn't get down to 43.35 today, but huge volume coming in, and of course we've got more in the day. But I'm thinking we're going to easily blow through this 43.35, and that would set up an ABC 1-to-1 at $30.26, which is what I've been looking for a long time. We'll be back in just a minute. Give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Still off 27 points on the S&P cash volume, just whizzing along, 2.75 billion shares. I'm going to say we're probably going to break 4 billion shares for the first time in a long time on the downside, maybe 4.5 billion shares by the end of the day if this keeps up. And especially if we stay down here and we start seeing some of these shares puke out. Andy Heck, of course, comes on at 5 o'clock tonight, and he'll be talking more about commodities. I called him on Tuesday night and asked some interesting questions. And, of course, we're very happy to have somebody like him at TFNN to educate us, especially his years of being in the retail commodity. Well, I wouldn't call it retail, but the commodity business on Wall Street. So we learn a lot. And, of course, I was talking about long-term capital management. And I went full-time like about 1 month before long-term capital management blew up. Everything happened. So it was very formative, and I spent a lot of time looking at the downside of the market and reading all the books about it after the dust had settled. And it's, as they say, a teachable moment. But you should know how these things work because they happen over and over again, from Bucky Hunt trying to corner the silver market to long-term capital management trying to corner the bond market in crappy bonds and the peso, as they used to call it, the peso problem. There's these things come along, they continue to come along, and there's nothing new about them under the sun, dear Horatio. So the history will and is worth it. But he's going to call in tomorrow at the bottom of the hour, and we're going to talk a little bit more about long-term capital management. Him from the inside and me from a student outside and afar. Maybe we can learn something. And, of course, he'll be on at 5 o'clock to talk about commodities and all the movement in those commodities. So we shall see. Anyway, a market moving rather sharply today. And, of course, some of the other stocks that came out with earnings, Yelp, they ran everybody last night. And this thing has made a little bit of ABC after ramming it up yesterday and killing the shorts off. This thing was up to 80, 81 bucks after hours. But, of course, I don't show that in this chart. But we do have a nice little ABC set up. That ABC would take you to $59.83 just on the little one. Of course, you got a 62% retracement off that bottom, which is, where's that at? $66.15 on July 17th. 62% retracement. It's pretty good for a smaller ABC out here. You could make the case just like in the case of 3D systems. This is a much larger ABC in the movement. And, well, let's do this. Let's just construct one here. If you're looking at the very long term on this, B being 49.11 down here, and C being the high up here at 82.81, sets up basically a 64% retracement. So it went a little bit before the, or above the 618 that we were looking for. But that would also set up a big ABC on the way down. Of course, we've got some volume really picking up and a high volume move out here at 66.69. So that's probably going to be, kind of got into it today, going to be part of the move out here. But Yelp has some very structural problems with their business model, so I'd be watching them very closely. I think they are probably way overpriced until they get things settled out. I guess I probably should go into the problems they have. We've talked about them before on this show, but that would be that anybody that posts something on there, they've been sued at least twice by the government and other folks. They have no right to keep what you post public. And, of course, everybody gets liquored up after being at a restaurant and being offended by whatever the latest goofy 18-year-old that was waiting on them said, and they go spouting off pretty badly. And, of course, they get sued for probably posting something that was maybe a little bit exaggerated. And, of course, the bigger cases that have made it through the court tend to be those of competitors coming up with phony reviews and smearing their competitors. There was one for a, a dry cleaners, and there was another one for a restaurant. There have been probably 20 of these cases. I know at least 2 of them have made it to court. And, of course, as soon as as Yelp has been made to give up the information on who had that account, these guys are going to get fried because, of course, they'd never been to the restaurant. And, of course, if you're going to do this, you better make sure that no one can trace back to you. And 2, you better post enough information that makes them know, at least the owner know, that you'd probably been there. I think the cases in both of them, both were dubious, and the owners went, this doesn't sound right. There's something fishy. These people just didn't hate their experience. I don't think these people were ever here. And, in fact, that was it. But if we look at the bigger ABC down in Yelp, it is a monster from $101.75 down to $49.11. You could say that this is a big ABC down. And again, you got bigger volume out here. you'd want to keep an eye on this. But a lot of these, if we do have the major pullback I'm looking for in this market, if we do close below 1938 today on the S&P cash, that opens up the trap door for huge downsides over the coming at least 2 to 3 weeks, I would imagine. And we'll continue to keep an eye on it. But watch for these bigger patterns, because this is exactly after you've had a 3-year run or 4-year run, as we've had, there's a huge possibility and probability that you revert to the mean on these. And, of course, I've been talking about it for a while. These stocks are massively overpriced historically, and it brings us back into the dot-com days. These guys are just barely making money. And maybe they will be the next Twitter or the next, what is it, the other one? Not Twitter and, what can you say, Twitter and, Facebook. The Facebook, which I think all those things are cults. You're not going to find me sitting there putting all my information. I spend all day trying to keep my information private. People just blurt it out all over Facebook. Oh, yeah, we're leaving this weekend for Cabo. Well, if I'm a thief, I know it's probably a good time to go rob your house. I can't believe people put that kind of stuff on there. You got to have your head checked. Anyway, I'm not big into, maybe it's just a narcissistic personality that maybe it's being developed in the United States too. Maybe that's why I don't get it. Maybe it's all about me. You got to look at me. I get a blue ribbon even though I didn't even hit the ball or do anything at the game. Everybody finishes first. I don't know. That's an argument, I guess, for another day and probably for another podcast. But I digress. Anyway, looking at Yelp, all these other problems, much more, and a issue, I think, where you could currently see a 1-to-1 taking you to $30.17. So we'll do that. I do find that revealing. People doing all the work, yeah. Well, I've always talked about Facebook kind of being the whole idea of it being that you get everybody else to do your work, like Tom Sawyer got everybody to paint the fence for Aunt Polly. And actually, there's a good picture. I think I saved that picture. Unfortunately, it's not going to show well through what we have here. Maybe I can post a link and get the guys out here to actually do that. But that it. Okay. Okay. What else do we have going on out here? Well, we're cracking back down to the lows right now with 2.8 billion shares. Volume, like I said, never really did start slowing down. And I guess we're going to get an entire hour to take a look at this. After the bell, another one of the massively overpriced stocks, Tesla, is going to have its time on the catwalk. On the catwalk. Do your little turn on the catwalk. Wish I could play that. Anyway, we've got a huge probably move setting up in this thing. And if it wasn't so short, I'd probably be all over it. But again, same reason I wasn't short 3D Systems with a 35 or 38% short position is the same reason that I'm not on Tesla right now. Need a few of these shorts to exit stage left to give a pocket where this thing can really drop and fall. Unfortunately, when you have huge short interest, even if you're right, there's going to be a lot of people taking their money way too early. You need to get a short. You have to, one, be right, and two, not have so many people acting like donkeys on the other side of that trade. Unfortunately, I think even if Tesla comes out with a modicum of bad news, I think if you fairly valued this stock, it's probably $40-45. And at $230, one of the most overpriced stocks I've ever seen in the stock market. But you get a good story, and you get a lot of people talking about there's no end to the blue sky in it, and you can keep these stocks up higher. Had many people calling in today or over the last week or 2 weeks about Maxwell. They were calling in at about 17 or 18. I said I hated it. I didn't say I hated it. I just said there was nothing to it. There was no news about them actually doing it. I think, we have a call yesterday or last week. Can't remember. Maybe it was as far as back as yesterday. But this stock's getting pushed down even before we have earnings after the bell tonight. And I think there's probably a good chance that we go back into this gap at $9, and maybe we'd actually look at buying a long-term hold on something like this down there. But I'm going to have to see how it comes back in there. Validation book. Anyway, you can give me a call at 877-927-6648. You can also email me at path@tfnn.com, or you can post something in the den if you want to look at it. But we've got a lot of these stocks that are breaking down. Of course, in the energy sector, which I am short, pretty good move down here on the XLE. Volume is picking up. When we look at this, I wanted to see more than 17 million shares today, and haven't really gotten it yet. I think that there's going to be a lot of people thinking that the energy sector is the safe sector, but I think maybe if we are seeing anybody come in and buy this, it's going to be those hedge funds that think that this is a deal today. But I think it's going down either way. I just think maybe it's going to take a little bit more time in the XLE. Certainly we saw the stocks getting absolutely hammered in this sector, and we've got a fairly good indication that at least we've got ExxonMobil, down on heavy volume today so far, with a good hour to go, hour and 15 minutes. You would want to see this thing go to another 30 cents lower and get at least 13 million shares and hopefully 15 million shares. But I have a feeling that this one's going to be a little bit one of these sectors that is more well defended than not. But of course, out on earnings, ExxonMobil pretty much putting, I think, the fork in it. And yes, it is done. But I think this one's going to be one that takes a little bit more time to set up. And I am triple short energy, by the way. So another one feeling rather superior, doing my superior dance. You remember the superior dance? Not everybody does. Some of these other stocks that are moving out here, Northeast Utilities, Outer Wall. This one actually up today, which is kind of weird. So this is the old Coinstar popping a little bit. But these are all earnings after the bell. And a lot of interesting moves out here. I'm going to go through them during the break, and we're going to look at some of them. But Yelp really moving. A lot of these stocks pre-earnings, fairly significant movings. Continue to keep an eye on some of these things. But it's been a rare day that you've had this kind of action pre-earnings in stocks, and really does start bringing me back to the days of the dot-com bubble. We just pretty much had a straight one-way move down when the housing sector blew up in 2008. But this is starting to look a little bit different out here today, especially with us down at the lows at 1938, just as we go to break. But you still have plenty of time to give me an email and or post a message in the den and or call me at 877-927-6648. Be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, and we're auguring down into the, we made a new low actually on the S&P cash. 2.9 billion shares on the consolidated New York Stock Exchange date. We've got just a little over an hour to go. Of course, following this show over most of the TFNN network is Tom O'Brien, the one and only, the big honcho at TFNN. And, of course, after him is Andy Heck. And Andy says he's going to call in tomorrow at the bottom of the hour in my show. We're going to talk a little bit about long-term capital management, because my guess is that everything is going to be going to hell in a handbag, and there won't be a whole lot to talk to about other than when will it stop. But we'll cover everything in the first half of the show and then talk about that. And then, of course, you'll be able to catch me in the Tom O'Brien Show with the Tech Insider hour in the 4 o'clock hour tomorrow afternoon. In the meantime, we got a lot of stocks moving pre-earnings. And this harkens back to the days of the dot-com bust, where we really had a lot of movement in the market almost every day, including on earnings. where a lot of people hadn't set up. But there are some stocks that are setting up very interestingly. Synaptics, if we get a huge rally back in tomorrow, you want to look at this one if it does well in earnings after the hours, because the chart is perfect. And this thing took off with high volume on the 11th of June. Is that right? July? Yeah, June. 11th of June with 9.5 million shares. This thing has come back in here with a whisper, and pretty nice setup out here. So I'm going to be looking at playing this after hours depending on how earnings come out. But certainly one of the more interesting stocks set up there. One of the ones that's a newer, this is a fairly recent IPO. I've been waiting for this thing to come back down to earth and reality. Tableau Software, they've got some very neat products. And unfortunately, they've got a very weak looking chart out here. So I would not want to disappoint if I was Tableau today. Symbol on it is DATA. And, of course, already giving up a couple of bucks, which may be part of the market. But it's got two lows out here for the July 10th with 1.3 million shares, and the June 4th low at 55.43 at 1.5 million shares. So if this thing does disappoint, I would not be surprised for it to blow through a few of those lows, go after the 52.02 low out here. Doesn't really look to me like this thing's got the juice to go much higher if it does, but this may be an excellent short play if earnings come out poorly for it, and you've got the fastest mouse finger in the West, which I think you're probably going to have after hours tonight. These things have been moving. And see what else we have out here that I thought was real interesting that was moving after hours and showing earnings after hours. We talked about Maxwell, Expedia, EXPE. Another one, and this is going to be looking very early, interesting. Let me get the news on it. And a question about GoPro. I don't have time enough for all of them, but yeah, Expedia after the bell. Keep an eye on this. It's already given up a lot, so you may have your short opportunity week, but you do have a high volume high out here at 82.36. GoPro, I have no idea. They've got less than, 40 days of being public, or 30? Who could tell? What a crapshoot. Anyway, keep an eye on some of these stocks out there. I think there's money to be made in the after hours, and we'll be playing it here at TFNN. And Tom will be reporting it over most of TFNN.com. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.